Hello, everyone. Thank you for joining us this afternoon. This is the Genscape Power IQ team here to go over our fall 2019 outlook, Far West load, pocket full of sunshine. Among many other topics, we will be discussing the Far West load growth and the pairing renewable injections we see in the grid with the lack of storage and currently transmission to pair. With me today will be Jess Solot, Greg Jeffrey, Reedy Goel, Brianne Newell, and our meteorologist, Michaela Faris, to discuss in detail. Please, at any point during the presentation, feel free to reach out about questions pertaining to the outlook or anything at all this fall. We'd be happy to answer those questions at the end of the presentation if there's time. If not, follow up afterwards. We'll be sure to get to you. We will release a recording and the actual deck afterwards for the presentation for your reference as well. And please, at the end of the presentation, we'd really appreciate if you could fill out the survey. Really helps for the quality of these presentations going forward and making sure that our clients are getting the most pertinent information. So the agenda for today, first we will review the summer 2019. That was certainly an historic one. Then we'll go into further detail about the weather performance, transitioning into the overall weather expectations for 2019 this fall. Going into the supply changes afterwards, we'll discuss some of the oncoming new generation, as well as some outages that are sure to pick up from the current levels. We will then discuss some scenarios via pricing for different probabilities of wind and demand, as well as some different market changes that can certainly affect the grid in different ways. And then we will wrap things up with a deep congestion analysis. So to kick things off, we will do a quick review of how our general outlook in our summer presentation fared. For the load standpoint, which Michaela will dive into in further detail, we did see fairly mild June, July, August load profiles, whereas August set the record that was certainly met with some extremely strong record pricing. Pretty much on the same order of magnitude to our 74 gigawatt projection, but certainly on the supply side of things, we saw our thesis of outage minimization and mitigation to an all-time high as certainly being false. We saw those outages trend upwards of 6+ gigawatts towards the later stages of August, and that really damaged the supply stack when we needed it at full strength the most. As far as the congestion went, as far as summer goes, typically pretty small spreads, and for the most part, our takes on the general direction for those spreads were more or less correct. Pretty neutral, say west to north congestion, south to Houston spreads verified. The overall west downside from some wind congestion was a little less pertinent, and we saw some 138 kilovolt voltage congestion for the far west that helped boost West Hub a little bit above expectations, but for the most part, we really want to dive into what kind of transpired in August. So before that, we'll discuss the weather side of things.
Thanks, Flannan. All right, take a look back at some of the weather patterns that we observed this summer. It's worth noting that we saw a pretty stark contrast to summer 2018. Instead of getting off to a rather warm start, we saw a continuation of those really unsettled conditions into June and even July. But it wasn't until August we started to see some of those warmer than average conditions. And initially we thought most of that warmth this summer would be focused on the west and east coast. What we'll see in the next coming slide is August really overperformed. And now to take an in-depth look at each month. As I mentioned, we did see those unsettled conditions really linger through the first half of summer. We were expecting temperatures to be fairly seasonal in June and July. Things were a little bit cooler across northern Texas in June and a little bit warmer across the southern tip of Texas. And then fast forward into July, things were a little bit warmer in the west than what we were anticipating. And again, those unsettled conditions definitely lingered through the first half of the month. And then fast forward into August, that ridge that we expected to set up in the west coast was focused a little further eastward, essentially focused over the Four Corners and the western portion of Texas. And we did see those much warmer than average temperatures, especially at mid-month. And it's also worth noting, talking about our forecast, the biggest deviation we saw was in July. June, we were forecasting to peak at 68.5, missed by about 500 megawatts. July was expected to peak at 72.5 gigawatts. And again, that's the month with the biggest deviation, again, because much more unsettled than what we were anticipating. And then in August, we were expecting another all-time record load peak. We did see it overperform even by about 500 megawatts. And again, each year we do expect record load levels to keep falling as long as temperatures are above average. A lot of this is due to the population growth that we assume to be about 1 to 2% year over year.
So let's get into the month of June. The average peak load for the month of June was around 60 gigs, and average OPA settled was around $30. So I would just like to talk about two particular days where we saw above average OPA settles, nearly three times stronger than the average. One was June 7th, where load was around 61.5 gigs, and the OPA settled around $90. Primary reasons behind this strong settle was one, thermal generation was not responding, outage totals were above 10 gigs, and wind generation was extremely weak, less than 2 gigs. That was about June 7th. And June 23rd, which actually happened to be a Sunday, and we saw very strong loads, above average 63.6 gigs, and the OPA settled above $100. Essentially, we saw nearly 4 gigs of stronger load net wind levels, sched capacity beneath 2 gigs, saw multiple 15-minute ticks of $1,000 pricing, and strongest hourly settle around $1,100, includes more than $200 of ORTC. That was pretty much about June. Getting into the month of July. So here, average peak load increased. We were at 65 gigs. OPA settle was still less than $40. However, two particular days where we saw the OPA was again extremely strong. June 11th, the first one, we saw the peak load was at 68.5 gigs. Again, sched capacity beneath 1.5 gigs, settled around $100. Reserves, ORTC reserves actually went beneath 4.5 gigs. And we saw peak hourly settle around $560. Over here, again, we saw less wind generation, less than 2 gigs, and very strong ORTC, nearly $500. And coming down to July 30th, the second day where we peaked in around 70 gigs, very strong OPA settle above $100, and again, sched capacity beneath 2 gigs. Both these days, we saw that energy prices did not cross $80. However, ORTC went above $500. Getting into August.
August was an exciting month in ERCOT as the average peak load was 70.24 gigs throughout the month, and strong pricing volatility was observed as the overall average OPA settle was $227. Overall, August saw strong load levels and neutral wind generation, as some days experienced robust wind generation for the summer months and others saw underperformance. August 12th was the day we reached the new peak load record of 74.5 gigs. And on August 13th, we saw the North Hub OPA settle at just over $1,500 with multiple hours of $9,000 pricing with over $2,000 of ORTC price adder. The peak load for that day was 74.2 gigs, just 300 megawatts shy of the previous day's peak load record. We saw around $9,000 pricing as a result of wind generation miss of over 800 megawatts, contributing to reserves to fall below 2,300 megawatts. And EEA1 was triggered. As capacity available to sched dipped below 200 megawatts, all available non-ancillary resources in sched were exhausted. August 15th was another exciting day as the North Hub OPA settled just over $1,700, where we saw multiple hours of $9,000 pricing with over $3,000 of reliability adders. We observed $9,000 pricing as a result of wind generation weakness over 900 megawatts, outage totals that increased by over 1.5 gigs, hours ending 14 through 17, and over 400 megawatts of solar generation weakness. As a result, the supply stack was extremely tight as capacity available to sched fell below 300 megawatts and EEA1 was triggered.
At the core of the pricing volatility Brianne just discussed, we saw the new and improved ORTC methodology, and at the core of that, we see the loss of load probability function. This particular function was essentially shifted, particularly the distribution of the reserve error when looking at the 1 hour ahead ATRUC process reserve projections versus the actual reserves that verify. The distribution that follows essentially saw a shift based on PUC discussions on the side of ERCOT. And the entire goal here was to trigger more scarcity adder at the same given reserve level. So we saw beginning March 1st, 2019 this year, that shift take place, but it really took until instances of days where total capacity, graphed here is the online reserves, dropped below 4,000 megawatts, and we would see that scaling exponentially really of the scarcity adder. In the next phase of installations in 2020, we will see another shift of a quarter standard deviation attached to the mean of the distribution, the probability function. So that will be something we project on the next slide. But first, just want to note that the few noisy points you see with the green X's close to the sub 3,000 megawatt level on the X-axis are somewhat abnormal and usually related to cases here where we saw extreme system prices, as the amount of scarcity adder on top of that, especially when approaching $9,000 for your settlement price, is going to be limited just by nature of how high energy prices are, and also just very strong reliability adder as well, especially when deploying those ERS resources. So looking at the summer 2019 data set, we decided to backcast that reserve level and energy pricing and use the proposed 2020 standard deviation shift to see, and this is accepted, so not proposed, accepted standard deviation shift that will go into place, and to compare the amount of ORDC we would see. And as expected, pretty standard translation upwards with this new revision. We took the same distribution parameters just with an additional shift that was used for the LOLP function for this summer. So if you looked at the August 15th day we had just a couple weeks ago, we would take our $1,700 OPA and bring it up closer to $1,900. Probably not the best day to compare, even considering that we would have days, or considering that we were at the price cap for multiple hours during that day. You can't really go past the price cap aside from congestion costs. So we would see we will see more impact from this constraint on days where we're hanging out around the 3,500 to 5,000 megawatt reserve level.
All right, and with that, we're going to jump into our expectations for this fall. As a whole, we are expecting temperatures to be above average throughout the fall. Essentially, these warm conditions this summer are expected to linger through the first half of spring, or first half of fall, excuse me. We'll dig into this a little bit deeper on the next slide. Additionally, we're also looking at above average precipitation this fall. And essentially what that's going to boil down to is we're going to see some pretty drastic jumps between cooling load and then some more mild days. And so it's going to be impacted by intermittent thunderstorm development and higher dew points. And in making this forecast, we did put a lot of weight on current sea surface temperatures, the current ENSO status. We're coming out of a rather strong El Nino and going into some neutral conditions this fall, but we are expecting those El Nino conditions to at least linger through the first half of fall. One other thing that's important to note is we are seeing those really warmer than average conditions in the North Pacific and essentially the Gulf of Alaska. And the last time that we saw this was in 2015. So the combination of these two things has led 2015 to be our best analog year for this year, as well as a couple others that we've blended into the mix. And then looking at our monthly breakdown, as I mentioned, we do expect this warmth to linger into the first half of September, and then we do expect those unsettled conditions to return for the back half. Again, conditions are expected to be warmer than average for October, but it's expected to be fairly volatile in terms of thunderstorms and the variation between strong cooling load and milder demand days. And it's also worth noting, so earlier in the fall, during September, we typically see temperatures cool from the low to mid 90s into the mid 80s. So the best chance at seeing stronger cooling demand is definitely going to be in September, and the way it's looking right now, it's looking like the first 2 weeks are our best chance at seeing elevated load levels. Load is going to be a little bit weaker as we go into October as temperatures cool from the 80s into the 70s. And then as we get into November, those temperatures are cooling from the 70s into the 60s. So load levels are coming down quite a bit towards the back half of fall. And additionally, on the back half of fall, we do expect those precipitation rates to be above average. So again, we could see some milder load levels because of that. And then taking a look at demand for this fall, we are expecting load to peak at 69 gigs. This is again the strongest load, or would be the strongest load peak observed in the month of September. So we are calling for a new September record. Typically load averages about 66.9 gigs, and this is based on the past 3 years. So again, it's going to be above average this September. And then jumping into October, load comes down a bit, as I mentioned, as those temperatures start to cool. This year, we're expected to peak at 63 gigs, while cooling load is still fairly elevated in the first half of the month. And one thing you'll notice on this chart on the right, this is demand from 2018. And as you can see, in September, we still have those strong cooling demand peaks. As temperatures cool, load falls below the 50 gig threshold. And one thing you'll note, last November, we did start to see that increase in heating demand, and a lot of that had to do with that early season cold snap that we saw last year. And again, because temperatures are expected to be warmer than average in November, I don't think we'll see that heating demand spike like we saw last year. And then jumping into our wind expectations for the fall. One thing that we know is capacity factors do increase through the fall months. So September tends to be our weakest wind production month, while November tends to be the strongest. And a lot of this is because we start to see a little bit more activity from the jet stream. So this year, we are expecting on average wind speeds to be above average, and that's particularly due to September and November, which are supposed to see the strongest wind anomalies. And those are particularly focused across the west. September could see some stronger wind speeds in portions of South Texas as well, but again, it looks like the west is going to be seeing stronger wind speeds as a whole. And it's also important to note, we do see these average wind speeds increase year over year just because capacity keeps on growing.
Awesome. So next we'll be talking about supply stack and market changes. Going into the fall, we are seeing an increase in capacity versus the summer. We're actually seeing about a 5.19 gig difference versus summer capacity. ERCOT's fall preliminary, Sarah, is actually projecting about 84 gigs of total resources. This includes about 8.2 gigs of wind generation as well as 1.2 gigs of solar generation. And in addition to that, we're also seeing about 1.4 gigs of planned capacity during peak load hours. So additional generation is expected to come online, which Greg will be talking about later. But we do think that for fall load, this will be sufficient capacity. So moving on to some changes that we've actually seen from when the SARA was released. We actually see Gregory Power as mothballed as of October 17th. Initially, we were seeing Gregory Power as listed for as capacity within the SARA, but as of October 17th, we are seeing less CC generation because of the mothball, and we'll be seeing it come back in the summer. Also, West Texas Wind, which is another unit that's listed as a resource for the fall, is actually retiring as of November 15th. So we'll be seeing less generation as well because of that retirement. And then Gibbons Creek, which is listed as mothballed in the SARA, is actually permanently retiring as of October 23rd. So this does affect our surplus capacity as well. In general, we have about 84 gigs of capacity total through fall. Average totals, which were derived from 2014 through 2018 OPA gen on outage averages. For September, we're seeing about 6.5 gigs of average totals, October 17.1, November 18.6. So if we look at Michaela's peak load forecast for September, we are left with about 6.6 gigs of surplus capacity. We're not seeing any changes to the SARA then, especially because Gregory Power and Whirlwind Energy are retiring later. So we do still see that 6.6 gigs as of September. Come October though, outages are expected to trend upwards. We're at 17.1 gigs. Our peak load is coming down. However, surplus capacity is a little bit low at 4 gigs. And then if we subtract as well Gregory Power from the totals, we get around 3.6 gigs, which does leave us a little bit tight, but this isn't including reserve capacity. And then in November, we're looking at around 14 gigs of surplus capacity with changes, and that's with Whirlwind Energy out as well as with Gregory Power out. So then moving on to generation de-energization, we are seeing in the SARA, based on transformer outages, some nodes that will be de-energized this coming fall. So we do have Goat Wind that's going to be de-energized in September, which is out in the west. Shouldn't really impact congestion too much. However, Duke, which is Hidalgo, actually has 2 nodes that are going to be de-energized on the 28th of September and then 1 node on October 2nd. That will have some impact to congestion. It is a negative 7% sync shift factor on Rio Hondo to MV Burns, so that will increase the risk for that. And then we also will see some decreased risk for North McAllen to West McAllen, as this node is around a 3.9% source on the constraint. So we will see some congestion impacts from that. In addition to that, we're also seeing a Bosque transformer outage. 3 nodes are de-energized starting the 7th of October and then 1 on October 19th. We will see some diminished risk to Bosque switch to Rogers Hill. It's about a 31% source on that constraint, so we will see it mitigated quite a bit. And then STP Unit 2, big nuke outage coming out, about 1.3 gigs. This will cause some north to Houston flows. In general, it should be pretty minimal, but we'll talk about this later in the presentation, how it might have some impact to Jewett to Singleton. TH Wharton, Quail Run, and Trinidad, we don't really see as causing too much congestion impacts, but they are units that will be seeing some de-energization coming up in the fall. So going off of this, we have seen quite a bit of outages throughout the summer. If you're comparing it to last summer, we've seen quite a bit more, especially this past month in August. We've seen some forced outages. Overall, we think this fall especially, September, will continue to see a higher number of generation outages relative to last year. This is mostly due to non-traditional run patterns from units this summer, especially with the duration between planned outages usually determined by number of starts or number of hours run. Traditional peaker units that ran more continuous cycles this summer, like Permian Basin, which had at least 2 to 3 units up running continuously, might require more maintenance earlier in the season, especially since peakers are usually rated for a higher number of starts, but a lower amount of hours. We do think that going into the fall, we'll continue to see a high outage number with some unit fatigue and units having to take forced outages.
Okay, so now to jump into some of our capacity additions that we're expecting to come online this fall. A lot of them are taking place in the south. So to start us off with the city of Victoria, this is a new gas peaker unit that's going to be going in on September 30th, tying in right at that Victoria substation. So this should have the impact of aggravating congestion, such as Victoria Magruder and Coleto Creek to Rosada, while also mitigating Blessing Lolita. However, because this is a peaker unit and its capacity factor is likely to be a bit lower in the fall season, we don't expect to see significant impacts, at least yet. It may be more apparent as we get into those summer months of next year. Next up, we have the Karankawa wind farms, 2 phases that are both going live in November. They're going to tie in on a substation between Lawn Hill and Pawnee, almost directly injecting their power into that Lawn Hill transformer. So this is going to severely aggravate congestion over the Lawn Hill transformer, while also have the impact of mitigating flows into the Corpus Christi area, such as Pettis Normana. And then lastly, we have the Hidalgo wind farm tying in McAllen, Texas, at the Mirasol 345 kV substation. So this should have the impact, number one, of aggravating North McAllen to West McAllen, while also driving further flows south to north along the Rio Grande in the form of North Laredo to Piloncillo. And then, on the other side, because it's a sink for Rio Hondo to MV Burns, we may see lower shadow prices from that constraint. Now looking at the west and the Panhandle, we do have a few new wind additions that are going to be going live. So one thing to note is that of these four, the Mise solar project is the only one that actually ties into the Panhandle interface. So this should have the effect of aggravating that Panhandle interface congestion, while the other three wind projects will not. But those three wind projects themselves should also have the impact of aggravating flows such as west and north, mostly from Louisville, Jones Street to Lake Point, as well as Bowie Transformer, and then driving increased flows over Scurry to Nab. And these will be going live in September and then November as well. And finally, we have a couple more projects going on in the west, more specifically the far west. So Ranchero is going to be going live at the Noelke substation on September 30th, which also should have the effect of aggravating flows south along the Rio Grande and also towards the San Antonio area. So we should see an increase in Treadwell to Yellow Jacket congestion, as well as Comfort to Seco, Hamilton Maverick, and it does not have much of a mitigating impact on congestion. And then Phoebe, which should be going live also at the end of September. This is a new solar farm, about 250 megawatts, that ties in almost directly on the sink for the majority of the current far west congestion. So our typical constraints for this time of year at least have been Fort Stockton to Solstice, Andrews County to Amico, and No Trees to Cheyenne Tap. This new solar farm will have a mitigating impact on all three, but it's important to note that this will have no effect on the off-solar and off-peak hours. So we should still be stuck with our far west congestion that Flannan's going to go into a little bit later.
Thanks, Greg. First, going into not the renewable injection, more so the gas stagnation that can plague the stack, especially going into the fall, where we see the increased number of outages, the increased fatigue, reducing the amount of consistent runs we see from our gas generators. So on this graph, we see essentially each of the main core types of gas plants listed, with the blue representing the combined cycle fleet, the green, which is faintly more apparent in the summer months, and the left-hand side of the graph representing the gas steam fleet, and then the smallest, representing 7 gigawatts of total capacity, is the simple cycle gas turbine peaker plants. In capacity, the combined cycle plant maxes out around 30 gigawatts, the steam fleet more so around the 10 gigawatt range. Essentially, all hands on deck in the summer. It makes, in some ways, unit assumptions for modeling fairly easy. All generation that's available will essentially be running close to their maximum availability, especially during peak weeks like we saw in mid-August. However, once we transition to the fall, you can see a pretty steep decline due to said outages, due to just overall economics not necessarily making sense for continuous runs, and we see the effective heat rate lower, which makes intuitive sense. What you do also see, it's a little choppy to see on this graph, but you see a little bit more gaps, a little bit more kind of volatility, if you will, between the generation peaks within the later months of the year and beginning months into the winter. And that's representative of sometimes the difficulty required when you have just a higher penetration of wind, straining the stack some days to a high degree when there's close to zero output across footprint, whereas relaxing the overall need for the system to the point where a lot of this steam and GT generation is all pushed out of the supply picture. So as we move into the fall, we will be sure to utilize our Power RT metrics to determine which units are running at lower capacity factors, which are going to see the more day-to-day fluctuations in the day ahead, and we'll hope to develop more predictive measures as well, as we see unit-to-unit variations really determine sometimes the overall pricing outlook for a given day in the fall. Going into the specific regions, often the Power IQ team determines the kind of feel for a generation stack on a given day based on regional kind of areas for generators. So looking at specific regions, typically units built with a similar type of technology or purpose. So helps to definitely categorize, especially with regards to congestion. As shown on this plot, we've broken it down into Dallas steam, Houston steam, Dallas Fort Worth CC and IC, which technically isn't gas, it's diesel, but shown in the orange there, and then in the yellow, the San Antonio Austin steam, South Central steam generation. So each of these breakdowns, and if interested, we can give you a unit by unit breakdown behind each graph, but you'll see, again, it's very similar to the graph shown on the previous slide. We see a pretty enormous amount of generation consistency between June and August that drops off heavily in the fall months here. So you can see, especially in the Houston steam fleet, a pretty, several periods of nearly no generation, and then spikes here and there, which in terms of projecting plants coming online can be very difficult because of the requirements or constraint requirements such as min run time, securing gas procurements, looking at of course forced outages and fatigue, and just overall, just being at a typically average much lower heat rate. So we do see this as causing some interesting fluctuations and ramp requirements on a day-to-day basis that the Power IQ team definitely tries to nail down.
Okay, so now we want to get into some of our pricing expectations for the fall. But to proceed that discussion, first I wanted to go over some of the major changes and also market movers, big events that may have potentially massive effects on the market coming this fall. So number one is the STP nuclear outage. This will be about a month long, starting in the middle of October, and that is about 1,300 megawatts of cheap self-scheduled nuclear generation that typically offers in at a marginal cost of minus $250. So this is going to have significant impacts as that generation needs to be replaced. Next is the phase 2 of the Gulf Coast Express pipeline. So this actually is going to partially relieve some of the gas takeaway constraints coming from the Permian Basin. And although it is difficult to tell exactly the impact this is going to have on gas prices, the fundamentals do lean bullish. So we could actually start to see some higher prices as the second phase of this project goes live and is completed in early October. And we've already observed some flows on phase 1 with some observed gas market impacts as well. So we'll be continuing to keep our eyes on this project. And then getting into the Freeport LNG terminal. So this is a new electric LNG liquefaction plant that will be going live in fall as well. This is 3 225 megawatt electric liquefaction trains that are going to contribute to additional base load generation growth, load growth south of Houston. So not only will this have impacts on congestion, but it may also contribute to some additional marginal energy cost impacts. And we'll actually also be able to observe the day-to-day activity of those liquefaction units from our monitors in that area as well. And then lastly, we do have more wind than last year. So compared to this time last year, we actually have about 880 megawatts of additional wind generation, bringing our total capacity to just under 22 gigawatts. So using all that info and using some of our high average and weak load assumptions and wind assumptions throughout the months of September, October, and November, we essentially put together each possible combination of load and wind and ran those through our supply stack model to come up with price scenarios for what you can expect on a typical day in each of these months. So just to kind of summarize September, we should have some lingering heat that Michaela went over for the first part of the month, should drive a few continued strong pricing days, but we will eventually start to see load fall and wind pick up that should have the impact of dropping those marginal energy costs as the month progresses. But as we get into October, it'll become the peak of generation outage season. So this should actually have the effect of driving up heat rates, even though load levels will be falling in comparison to September, while wind capacity factors will also be increasing as well. And like Jess mentioned, this is actually the month where we have the lowest capacity margins. Now in November, we should also continue to have a healthier gen stack, lower heat rates because of stronger wind production and weaker load as well. But in November, gas prices actually have the effect, or they could potentially make or break the LMP forecast. So even though heat rates will be falling, the volatility in gas prices, particularly with respect to the new Gulf Coast Express pipeline activity, may cause quite a bit of variability in that price.
Next, we're going to go over congestion analysis. Let's begin with going back to fall 2018 and the top constraints that posted with maximum shadow price. So in this list, it lies in the descending order of how much they posted with the shadow price, and these are the top constraints. On the left, they're actually pointed out on the map in their rank order, and we will be going over it in detail in the next slide. So the first one would be Everman switch transformer, and the next is Watley, Robertson to Pluma. We don't really expect to see these bind now because the limit for both these constraints have been nearly doubled up. So the first one went up to 700 megawatts, and the second one is now at 400 megawatts, and we haven't seen them post since 2018 year end, so not really expecting this to bind. The next one is Cooper Creek substation to ARCO. We are again not expecting this to bind. That is just because there are no maintenance or outages scheduled, and the last time it posted was in February 2018. Similarly, with Nagodershitz and SE 30 knot switch, we are not expecting this to bind again because the last time it hit was in November, and there are no outages scheduled at the moment. When we talk about Scurry to Nap, definitely expecting to see some impact. We actually saw this post 2 weeks back. This can be observed if we have some strong wind generation in Panhandle, and also some West Panhandle additions that Greg went over, some solar and wind farms coming up, increased risk to this constraint, and additional 150 megawatts from Gopher Creek also adds to this congestion. The last one over here being Rincon to Ingleside 2-point switch. We can see this bind again because there are actually 2 line outages that are scheduled to go out, and Just will be going over these later, which have pretty strong LODF on this constraint. Moving on to the next slide. We do expect Alvin Sub to mainland to definitely impact again because this depends on strong coastal load and generation weakness in Texas City, which can be observed later, and also if we see some 6i generation going weak, definitely this constraint can bind. Words to Flat Rock, LCRA definitely can bind again. Strong load in Austin. Generation strength from thermal hydro units which are on this source side, and also some rolling line outages, so definitely can expect this to bind. When we talk about Hamilton Road to Maverick, definitely can see this again. It depends on the wind generation in the Big Bend area, and also some west generation additions that add to this congestion. Lastly, Lanternal to Solstice and Concho to Very Best, not really expecting this to bind again. The last time Concho to Very Best bound was in November 2018, and there are no transmission outages going on, so not really expecting them to bind. The next, we would be moving on to systemic flow patterns.
Thanks, Reedy. So going over some of the more macro flow patterns, we definitely see the west-north constraints as definitely of interest and have had a common history in ERCOT. We've also seen into the summer some increasing risk along the Rio Grande in both directions based on wind capacity concentration. The west to south or north to south flow pattern listed by the orange arrow also sees some increasing risk to return this fall. And the south to Houston flow pattern finally is something we have seen intermittently on the 345 network by Houston, and we do see some increasing threat for that. To start off here with the west to north constraint, this is definitely something we see some common constraints in the past and more recently, such as Louisville, Jones, Lake Point, and Eagle Mountain, Moristito, as certainly not going away despite increased topology, flexibility, and just overall transmission capacity from the wind-rich Abilene, Panhandle area, moving into the large Dallas-Fort Worth, Dallas load centers. This is still a fundamental flow pattern that we expect and should see consistently in the day ahead. However, it is typically a constraint we see solved quite frequently by generation calibration, particularly looking at the Dallas-Fort Worth and north of Dallas-Fort Worth generation that sit on the sink for this congestion, often curtailing their output when receiving lesser prices in the day ahead. And then seeing on the reversal side, some increased generation runs from generation east of Dallas. You may be more typically expensive units like a Lake Hubbard that will receive a better heat rate in the day ahead because of said congestion costs. So don't expect a whole lot of consistent north congestion adder, especially when looking in the real-time market. There should certainly be some instances of this congestion, but not to a consistent standpoint without the driving transmission outages currently scheduled. Next, we're going to go over into the bi-directional Rio Grande flow pattern. Certainly, the constraints that we expect to be a little bit more pertinent will be flowing west or north to south along the river there, just because of the increased expectations for west wind production throughout the fall. We have been seeing this congestion post more and more frequently, and we will see even increased frequency in flows, most likely, as Greg discussed earlier, with the installation of the Ranchero wind farm, further exacerbating that congestion. So on the flip side, still in periods where the wind is primarily concentrated along the coast with weakness in the Big Bend area, we can certainly see the reverse flow pattern take place. So by no means do we expect that congestion to fade via North Laredo, Piloncillo, Laredo to Las Cruz, Big Wells to Brundage, all constraints that could return, and the addition of the Hidalgo wind farm certainly further exacerbates some additional capacity in the source. So expect that to be flip-flopping throughout the fall, just with a bit of bias towards the north to south flow direction. Next is probably one of the more unique flow patterns that we expect to really kind of take off, particularly over the end of September into the end of October period due to a big 345 kilovolt line outage. We do have the Comfort to Seco and Bergheim transformer constraints monitored elements to be the strongest candidates to return, considering that we do have the increased capacity factors at the West wind farms and load being served in the south central area not being met with the same consistent generation from a lot of those steam units, as mentioned a few slides back, that usually drop out economically in mass around the fall season. We should see this flow direction a bit stronger, especially on those 345s coming down by the Abilene area. And this Bergheim to Kendall outage puts 40% of flows over the common contingency for the Comfort to Seco branch. So when we say it puts about 40% of its flows, we referenced the LODF or line outage distribution factor earlier in the presentation. That's the type of power flow analysis we're looking at, and this is a pretty seriously large line that we expect to create some systemic risk over this time period. Next, and finally, looking at the south to Houston flow pattern, we do see this as returning, at least with prominence during the early stages of the fall, mostly due to the preceding time frame before that STP unit number 2 nuclear outage, which is a key source side unit to contribute this flow. But we also see some transmission outages. The Dow to ST branch on the 345s will be taking out of service, increasing risk for other transmission like the STP to WA parish element to bind in place and create that south hub, south load zone depression relative to the Houston upside. Further, different type of constraint, a more localized would be the Coleto Victoria constraint, which is a bit more wind driven. Strong coastal wind drives both these constraints, but a little bit more so for this Coleto Victoria constraint. And with Victoria CC, a unit that we often see take some outages, we definitely could have a bit more, of that congestion take place, even with some peaker GT installations of recent on the sink for that particular constraint. Big thing to note here, though, that really kind of increases the risk for this flow pattern is the addition of new load just south of Houston via the Freeport LNG, which I'll discuss here on the next slide. We see Freeport LNG as actually the first large-scale North American LNG facility that will be on the electric motor type technology. And all of this load will be served via the ERCOT grid. So we've already seen signals, specifically Genscape's LNG team have seen signals on our load monitor over here by Freeport that we have seen testing phases for Freeport LNG to the point that we believe they are well on track to be fully commercial at some point in September, which should contribute 1/3 of the approximate 650 megawatts of load expected to come on at the Dow substation. What this does for that south of Houston flow pattern that I just mentioned is essentially just increase the amount of Houston load that needs to be served by all this south and coastal wind generation. So specifically for those SCP to Dow, Dow to Oasis branches, we'll see 20% of that load flow over these lines, and we do expect those to be binding at higher frequencies, especially with pairing transmission outages. Specifically, or looking down further south at a different LNG facility, Cheniere's Corpus LNG, we actually see not nearly as much of an impact because of the typical gas motor design that only comes with an attached 40 megawatts of load at the substations. And we've had 2 commercial trains now since June, so to the point we don't really see any load growth to a normal extent in Corpus, all concentrated there in Dow. So transitioning to a bit more localized congestion, specifically the far west, a commonly volatile area with the explosion of the gas and oil industry out in the Permian. We've seen somewhat of a subsiding amount of lower voltage congestion, specifically the past few months. And this is something we see as seeing potential to return in the later stages this fall, particularly after November 1. But for now, you're still seeing no real signs of systemic congestion via the Fort Stockton-Barilla branch. So we'll get into some intermediate updates for the Far West Texas project. No big updates yet. Essentially, the goal of the phases of the Far West Texas project proposed and approved is installing higher voltage, specifically 345 infrastructure to help alleviate the amount of load growth at an exponential rate and help kind of mitigate the reliability and voltage instability concerns that have been arised in numerous studies. So no immediate advancements on that front just yet, but there's some intermediary stages that definitely hold significance for this fall. But endpoint, we still don't see the kind of core renewable mix of having solar weakness during the night periods and also having some strong shore-side wind really be met with the current or at least near-term transmission upgrades. So still some congestion risks to look out for. First, looking into some of the intermediary phases of this project that aren't necessarily going to be finished here by 2019, but are on the horizon, have seen some outages kind of indicate work already ongoing. So the first is a phase shifter between Fort Stockton and Solstice. Essentially, this is a transmission element that will help increase the overall transmission capacity, the overall reactive ability for the grid to manage very high and consistently high commercial load. And we will see this not come into service until later, probably March 2020, according to proposal documents, but certainly something we see in the future as relieving the common contingency for Fort Stockton-Barilla, which is the Fort Stockton to Solstice branch. So we've seen this line roll out likely in the initial phases, but now with it back in service, we will see this line still at the typical line rating for the fall. Next part of kind of upgrading the lower voltage issue here in this Barilla area is actually upgrading the very pertinent constraint and probably the top performing constraint of the year thus far, and that is Fort Stockton and Barilla. So this constraint lies in the 69 kilovolt system, has a very low transmission holding capacity, and there is the next stage or tying phase to this project, which is actually upgrading this to 138 branch and bringing some stronger capacity. This is also something that we've seen flows actually blocked off of because of related disconnect and circuit breaker outages. So based on the current outage file, we should see these outages wrap up by November 1st and resume flows over Fort Stockton Barilla before the later stages of the upgrades to the 138 take place. But as of now, that is very much in flux. Not a lot of definitive data on that. But from what we can tell, the return of the very high shadow price performance, as shown on the figure on the right-hand side of the screen, that actually implemented a shadow price cap, as seen in the orange, because of the consistent violation and reliability concern of this constraint. You definitely see potential for that to return given the current information. To kind of wrap up the main things to look out for immediately this fall, I covered the Fort Stockton Gomez 69 kilovolt line and the Fort Stockton circuit breaker and disconnects. These should wrap up November 1st, which would return the threat for the Fort Stockton Barilla constraint. But we are wary of outage delays or future energizations onto the 138 kilovolt system. So this is far from a permanent type issue when these lines return. As far as the energization of the links lines, this is a new substation links that should help alleviate some of the flows during the off-solar period, particularly for a Woodward 2 16th Street or Rio Pecos to Woodward 2 flow pattern. But it does increase flows for the Fort Stockton Solstice branch, which is the common contingency, as I mentioned, for Fort Stockton Barilla. So when this line, or these sets of lines are projected to come into service at the end of August, we could certainly see by November some increasing risk for the Fort Stockton Barilla path, even beyond levels we've seen already in 2019. So something to watch out for. And then finally, the No Trees, Shan Tap, and Winks to Shan Tap line upgrades. These are upgrades that are part of a larger upgrade from the Andrews substation down to Winks. It's really only one half, so we will have to wait past November 4th when both these lines are energized to really get the full alleviation of flows a little further north near the Odessa region. But for now, we should see some alleviated congestion for the No Trees Shan Tap branch itself. Wouldn't expect that to bind with a much higher line limit, but the No Trees, the upside issued congestion that gives upside to No Trees Wind Farm can certainly return until we see later stages to be announced of this project. Next, I'll pass it off to Jess to go into some more detailed analysis on the outage front.
Thanks, Lennon. So the first outage we're going to be talking about that impacts South Load Zone is Lawn Hill to Pawnee 345 kV. This line is going out September 6th, then going through October 18th. This does have a 1% LODF on Pettus to Normanna, which seems small, but it's in a sensitive area, and the Lawn Hill to Pawnee limit is about 1,069 megs, and Pettus to Normanna limit is about 40 megs. So given this line outage, we could see about 10 megs flow onto Pettus to Normanna, which is quite a bit given that its line limit is only 40 megawatts, and this would have a pretty large impact on South Load Zone. Could cause some strong south basis by pushing the load zone up relative to the hub. The next outage is Edith Clark to Tesla 345 kV. This line is actually part of the Panhandle interface, and it's going out October 26th through November 19th. This will actually reduce the line limit of Panhandle interface to about 3.3 or 3.5 gigs, and we'll continue to see Panhandle bind, especially with this outage out. And once we get into the fall, we'll also see wind generation start to ramp up. So we'll actually continue to see this through the fall until around November 19th. We could see it past that, but it'll take more wind strength in the Panhandle to see this bind. We'll also see Panhandle hub push down. It will be equal to 100% of the shadow price. So Panhandle hub will see some downside from this line outage. Next is the Ingleside DuPont switch to Rincon 138 kV line outage, as well as the Portland to McCambie 138 kV line outage. So Ingleside DuPont switch to Rincon starts in September and goes through October. and Portland to McCambie also starts same time, September 17th, and then has a shorter duration, goes until about the 30th. The first line has about a 41% LODF on Rincon to Ingleside DuPont switch, which is the parallel line. And then Portland to McCambie has about a 15.3% LODF on Rincon to Ingleside DuPont switch. Last time we saw this was last October, bound for a day with max shadow price of $3,500, and that was only with the Portland to McCambie line outage. So adding the additional Ingleside DuPont switch to Rincon line outage would actually increase pressure even further on this constraint. Not to say that we think we'll see this bind consecutively for the duration of the outage with a max shadow price of $3,500, but we do think it'll impact South Load Zone quite a bit and bind with strength, especially if Ingleside and Gregory are offline during that time frame. And then the last one is STP2 de-energization. So it's about a 1.3 gig unit. The transformer outage is approved to go out on October 6th. However, it's received at ERCOT for October 4th, so we could see it go out a bit earlier than that October 6th approved date. This actually has a negative 11.3% PTDF on Jewett to Singleton 345 kV. This is actually the line that bound last time we saw the STP nuclear outage. So we do expect this to bind with pretty minimal shadow price. Last time it bound, we also saw some additional line outages around there that we don't see for this time, but it is a pretty large unit in Houston, and we do anticipate it to cause some light difference between North Hub and Houston as well as South Hub. So we don't expect to see really Houston or South basis from this as well as North basis, but we could see a couple of dollars of spread between North Hub and Houston and South Hub. And next, I'll pass it on to Flannan to go over a summary of our fall expectations.
Great. So to wrap things up here, looking at the overall supply picture and supply health, we certainly aren't going away from strong load conditions, especially to kick off September. With the outage total certainly in flux, and we seem to be favoring above average conditions, seeing a Gregory power mothball on the horizons, at least in October, and seeing that just general trend for just consistent runs from your steam fleet, seeing reduced capacity factors from the gas fleet overall, has us concerned for some pricing elevation. As we outlined in our pricing scenarios, we're nowhere close to the extreme and consistent scarcity we observed in August, but certainly keeping a cautionarily bullish stance to where prices could go this fall. As far as the congestion outlook goes, certainly had a lot to say for this presentation. We do see the overall west and north flow pattern as not being too impactful, although that west region with all the wind farms and the Panhandle hub could certainly see a bunch of downside collectively from north to south constraints and west to south constraints collectively binding. The south to Houston flow pattern, as we discussed, with some increased LNG related load and seeing some 345 transmission work could certainly take place and is likely to be of impact in the early stages of the fall. But as far as the presentation goes, that is all we had to discuss. Just wanted to mention that if you would like a trial, feel free to reach out at this link and contact the director of the short-term analytics desk, Adam Jordan. At this time, we'll break for time to answer some questions, and we'll respond in hopefully a couple minutes here.
Okay, so we got a question about how we came up with our inputs for our pricing scenarios. And just to go over that, so for load, we did use the 75th and 25th percentiles to come up with our high and low load cases for the months of the fall. And for wind, we use the 75th and 25th percentiles of the capacity factors of wind production historically. And then, taking into account the difference in capacity factors for coastal versus interior wind farms, scaled it up appropriately considering the new capacity that we are going to have online for the fall.
And we've got one more. Is it possible to reach 70 gigawatts in September? At this point, I wouldn't rule it out. The past couple of years, we have seen quite a bit of unsettled weather to start the month last year. Notably, we did see that unsettled stretch, and we didn't really see some above average temperatures until the 18th and 19th of September last year. The year before that, we saw quite a bit of demand destruction in the first half of the month from Hurricane Harvey. And with the amount of population growth we've seen year over year, it's a bold statement, but I wouldn't rule it out at this point in time, potential to hit 70 gigawatts in September.
And that concludes our presentation. Thanks everyone for attending, and we'll be sure to send out the slide deck and recording. And please, if you have time, fill out that survey. We greatly appreciate it. Thank you.